In this presentation, we will track and pay bills. In other words, we will write checks for bills that have been entered into the system in the past using QuickBooks Track and Pay Bills system, managing which bills we want to pay, selecting those bills, and then going through the process that would write the check for those bills within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the Get Great Guitars file. We're going to go through our objective up top by selecting the plus item up top, looking at the vendors section. At this point in time, what we're going to do is write checks. We're basically writing checks for bills that we owe. However, we're not just going to go straight to the writing checks here because we're going to use QuickBooks system to manage the bills that are in the system, sort those bills, select the bills that we want to pay, and then pay them. To do that, we're going to go to the Pay Bills. And note that the Pay Bills item is an item that's going to help us to write a check. It's a different form, in essence, from the check form. The check form is us just writing a check. Pay Bills results in the form of a check, but QuickBooks sees it as a different form in that it's a different data input screen because the Pay Bills, of course, are checks that we're writing specifically for bills that have entered into the system. So it's a little bit different than the normal terminology we might hear about bills. In other words, if we got a phone bill, the bill is a bill whether or not we just wrote a check for it today or whether we write a check for it in the future. If we just took that phone bill, wrote a check for it, we would use the check form. If, however, we wanted to enter it into the system and write a check later, enter it into the system, record the expense now and the payable now, then use QuickBooks to manage those bills that we need to pay and then print them all at one time or decide which of them we want to pay, then we would enter it as a bill. If we enter it in as a bill, that means that it's going to be in the system, however, not yet paid. The bill means, in other words, from a journal entry standpoint or an account standpoint, accounts payable is going up, the liability is going up, we owe money in the future, and the other side goes to whatever we paid for, typically an expense, utility expense, phone bill expense, whatever supplies expense, whatever we paid or whatever we're going to pay in the future. So now we're going to go to the pay bills. We're going to say these bills have been entered. We're going to use QuickBooks to manage which of those bills we want to pay, then choose them and pay them, and we can all pay them at one time using the Pay Bills feature, which is basically writing checks for those bills that have been entered. So we'll select the Pay Bills then. In our system, we only have 2 bills that we need to pay. So if we are a larger company, of course, we may have a whole lot of managing the payables. Could be a full-time job, could have a department just to manage the payables, what will be needed to pay. So if we had a lot of bills going on here, then of course we can sort the bills by the due date. We can sort by other items as well to choose which of those bills are going to be most important, which are the ones that we really need to pay soon. And then we can select multiple bills that we want to pay and pay them at one time. If we're printing this from a printer, in other words, if we're printing them out of QuickBooks, we would have pre-printed checks that we could then put into the printer. We could select all of these bills and then use the printer to print them at one time. Print them easily, fast, quickly at one time. We here are not going to be printing the checks, and we can also assume that if we had another system where we're just writing the checks by hand, same thing, because the checks are really already pre-numbered outside. We'll write the checks and then we'll enter them into the system with the same check number. So that's what we're doing here. We got the checking account. The pay bills means that we're going to write a check. So the checking account is going down. The pay bill also means, and this is probably more important when you see pay bills for QuickBooks, it means that the accounts payable is going down. It has to. It doesn't mean utilities. We're not paying the bills for, we might be paying the utility bill, but it's not recording the utility expense because we already did that when we entered the bill. So pay bill means that the other side is going to always be accounts payable going down. We're going to say that the date is going to be 2/21, so 02/21/19, and the check number should populate on its own, so we will keep the check number. We are only going to pay one of these. We're going to select Fender, And just note that we're just going to pay that one. If we had some payment other than the full bill amount, we could enter that here. And that would, of course, leave an amount due for that bill that we would then need to pay at a future time. Just recall that we could pay multiple bills. The system would just then write multiple checks, assigning the check numbers to them in order. So if we wanted to do that, it's a great system to be able to do it. We can print all the checks at one time, which is very nice. We're going to go ahead and save and close, and we'll check out what the transaction will be like by going to the reports on the left side. So we'll select the reports. We're going to go down to our favorite balance sheet report, scrolling back up top, changing that date range from 01/01/19 to 12/12/31/19, January through December 2019, and run that report. And then if we scroll down, we're going to say that the checking account should be going down because we basically wrote a check. So if we select that item and scroll down, we're going to see that we have this pay bill. There it is. Notice what it says here, pay bill brackets check. So it's basically just telling us this is a check, but it's a specific check. QuickBooks sees it as a specific type of form as opposed to another type of check. If I look at any of these checks, note what I could have done. Here's a Verizon check. That obviously means that we paid Verizon, the vendor. Cash is going down because it's a check. The other side's probably going to telephone expense or something like that. Down here it says this is a pay bill check. It's still going to a particular person, a particular vendor, a company, in this case vendor, which is our vendor. But in this case, it's not going to be going to any other account other than accounts payable. It has to go to accounts payable because that's what it means to be a pay bill, a bill payment type check. If we select that item, then we will actually go to a check format. It doesn't look like the same data input screen, but it still tells us up top that it's a bill payment. It's a bill payment, not a normal check. It's still a check because that's what a bill payment is, but it's not going to be the normal check, meaning it's going to be decreasing a particular bill applied out to a particular bill, decreasing, in other words, accounts payable. So if we close this back out, we can see the other side in accounts payable by going back to the report and scrolling down to the liability. There's accounts payable, selecting that 1,200, scrolling down to there's the pay bill once again. So accounts payable will always look like this. This is what it's always going to be. Here's a bill and here's pay bill, right? Here's a bill, here's pay bill. Here's a bill, here's pay bill. That's how it's always going to be. That's what accounts payable will typically look like. Accounts payable goes up with a bill, goes down when we pay it. And so we'll select that item, and once again, we will see that pay bill item here. For more accounting information and accounting courses, visit our website at accountinginstruction.info.